Today, we'll examine which crypto tax calculation service is most accurate for reporting your crypto income and avoiding trouble with the IRS. The results are going to shock you. There is no one else in the industry who is talking about this crisis. I am the only one talking about it. I think in this episode is going to be shocking. You'll want to watch it twice and share it with your friends. Is it possible that the emperor isn't wearing any clothes? Let's find out. Welcome to the Clinton Donnelly Show, where I explore how taxation and regulation affect our daily lives as investors. And now, a word for our sponsors. CryptoTaxAudit.com is the income tax expert for U.S. crypto investors. They offer the full suite of crypto tax reporting services for medium and large size investors. They can calculate your crypto gains, prepare a complex tax return for crypto income, and defend you in an IRS audit. Frustrated with using online crypto tax services to calculate your capital gains? High frequency trading, NFTs, play to earn, DeFi, DGen? CryptoTaxAudit does it all. No client is too complex for their in-house crypto accountants. Better still, they will defend their results in an audit by the IRS. No online crypto tax service offers that. Frustrated that your accountant doesn't understand crypto taxes? Our CPAs and enrolled agents do complex crypto tax returns for breakfast. They use a bulletproof crypto tax return methodology to prepare a tax return that doesn't attract an audit. CryptoTaxAudit also offers an exclusive audit defense membership service. There's nothing else out there in the industry like this. It's like car insurance for your tax return. If any member's return gets selected by the IRS for an audit of crypto reporting, they will defend you for no additional charge for the entire life of the audit. You also get the confidence knowing that they can defend your results if the IRS starts asking questions. No crypto tax firm has defended as many crypto traders in IRS audits as CryptoTaxAudit. They have an amazing win rate. Go to CryptoTaxAudit.com to schedule a private consultation today. They are your one-stop shop for all your crypto tax needs. CryptoTaxAudit.com. Now, on with the show. I'm your host, Clinton Donnelly. My Twitter handle is CryptoTaxFixer. I have a degree in international financial regulation, and I have tax clients in over 71 countries. The opinions expressed in this show are not legal advice. Tax and regulations are complex. Experts can disagree. Your situation's unique, so always consult a professional. So let's talk about crypto tax calculation services. So you're ready to do your taxes. Your accountant doesn't understand reporting cryptocurrency income. So you have to provide him with a spreadsheet of all your trades showing your gains and losses. You pick one of the online crypto tax calculation services to calculate the gain by yourself. The major services serving the U.S. retail market are Accointing, Bitcoin.tax, CoinTracking, CoinTracker, CoinLedger, CoinPanda, CryptoTaxCalculator, Node 40, Ledgible tax, TaxBit, TokenTax, and ZenLedger. After hours of agonizing over your transaction records, the results are way off from what you were expecting. Is the problem you or the service? Many investors call me up with the same question. What am I doing wrong? In this episode, we will look at the comparison of how accurate these crypto income calculation services are on centralized exchange data and then on decentralized data. Finally, I will discuss strategies for how to report on your tax return. So one day I decided to benchmark these services. We did it in 2022 for client data from 2021. I asked my crypto analytics manager to have his team of crypto accountants benchmark these services using good client data. We have a formal reconciliation methodology that each crypto accountant follows. The results are then peer reviewed. Finally, my crypto analytics manager reviews the results. Our methodology allows us to produce consistent results. An average gain calculation takes 24 hours of crypto analyst time and 6 hours of my reviewer time. If it takes my experienced staff 30 hours to do a reconciliation, imagine how long it would take an inexperienced taxpayer to do it themselves. We've benchmarked centralized exchange separately from decentralized exchanges because of the different data sources. We've done over 30 benchmarks. Before benchmarking, I assumed that all these services would produce the same results given the same input data. Boy, was I wrong. What we discovered was alarming. What these services do not promise is that they are accurate. That's right. Go to your favorite service's website. Does it claim anywhere to be accurate? Read their terms and conditions. They specifically disavow any warranty of accuracy or fitness for purpose. Here's a personal story. Before I had my own crypto accountants team, I used to subcontract one of the major crypto tax calculation services that I mentioned earlier. When they learned that I was starting to defend crypto investors in IRS audits, they refused to do any more calculations for me. They refused to stand behind the accuracy of their results, which they were reconciling. The fact is, none of these services will defend you in an audit. What can we learn from centralized exchange benchmarks? The first client I'm going to show you only traded on US-based centralized exchanges. We knew his data was very clean, very few missing records, and my crypto accountants applied the same accounting methodology to reconcile the transactions. On the screen now are results from one of the benchmarks of centralized exchange transaction data. If you can't see this video, I will summarize the observations. For each service for the prior year, this would be 2021 tax data, we listed the total transactions counted, the total proceeds, and the total gain calculated. What does the difference in total transaction counts mean? Well, each service provides a total count of transactions that they processed for that year. And since they all received the same data, you would expect these counts to be pretty consistent. My first observation is that the total count of transactions ranges from a low of 170 to a high of 26,000. 7 of these results are less than 1,000 transactions. 4 of the results are between 5,000 and 11,000, and one result shows 26,000. These services do not agree on how many transactions they read from the API keys. I find that disparity astonishing every time I consider it. What can we conclude from the transaction count data? Well, it tells me that each service has significantly different methods for interpreting transaction data. There may not be one right way. I have a comment, and as I study this all the time, I just reflect on it. It seems to me that the services in this example that, at least in this case, generated transaction counts in excess of 1,000, they're using something creative to come up with transactions. The difficulty that brings is that when you're trying to reconcile it, that it's created much more work. You have to reconcile away many more transactions, perhaps 10 times as many more transactions. That introduces an opportunity for error, confusion, and mistakes. So, I just find it difficult that we can't agree on the number of transactions read. Why is this disparity in transaction counts critical for you? Well, in one recent audit of a client I represent, the IRS auditor cited the difference in transaction counts as proof that the taxpayer had a significant amount of missing transactions. The IRS claimed that there were around 23,000 sell transactions, whereas the taxpayer had 2,000 transactions. They cited as evidence that the IRS calculations were more accurate because they had found more sales. Ultimately, the auditor claimed that the taxpayer owed $2 million based on the IRS gain calculation numbers. How would you feel if the IRS sent you a letter to pay $2 million? Would you pay it? What would happen to your life if you had to? Well, the good news is my in-house forensic staff dissected the IRS results, and we found 3,000 errors, which will undermine the IRS claim of accuracy. The critical lesson for all viewers is this: gain calculation is serious business. Which service is cheapest or easiest to use should not be your primary concern. What do the total proceeds column tell us about this benchmark? Well, total proceeds are the value of everything sold in the prior year, and we're not considering the costs. It's just the sales price, the proceeds. The results were spread between 1.2 million to 4.4 million. That's a 4x spread. Now, each of these services receive the same transaction records. So why don't they agree on the simple question of how much was sold last year? Why don't these services agree? Well, there are many factors. If there were just one outlier, we could consider it a dubious answer. But when all the answers disagree, maybe they're all dubious. I don't have an answer. I'm just here showing that there is a crisis. One of the difficulties with having a high proceeds number is that you have to reconcile away more costs to get it down to a reasonable number. On the other hand, if you have a low proceeds number, it might be wrong, and it might set you up for the IRS discovering that maybe you underreported your income. So there's pros and cons of having a low or a high number, but obviously you don't want to be at one of the other extremes if you're using a gain calculation service. The total calculation is where the rubber meets the road. This is the number that determines how much you pay in taxes. No one wants to pay more taxes than necessary. These numbers were all calculated using the FIFO universal cost basis method. The final observation is that the total gain ranged from a low of about 70,000 to a high of about 800,000. That is an 11x spread. That's staggering. This is after professionally trained crypto accountants did the reconciliation. The problem here lies with the services. So which gain amount would you want to report on your tax return? The obvious conclusion is that which service you use will significantly affect the amount of taxes you pay. Here's a key takeaway. Despite how good a job you think you're doing reconciling your crypto gains in an audit, the IRS will disagree with you. The amount of disagreement could be huge. It is not surprising that all these services disavow any claim of accuracy in their terms and conditions. None of these services will defend you when audited. And at an average price of a couple $100, you get what you pay for. Let's dig a little deeper. Why do these results vary for centralized exchange data? Well, there are some good reasons. It doesn't cover all the reasons why these data varies, but let's talk about some of them. First, the exchanges are not committed. They're not committed to 100% accuracy in transaction history recording. A surprising number of transactions go unrecorded. Exchanges update their APIs and CSV formats frequently and without notice. So the services must detect and fix their import routines every time there's a change. It's expensive. Services struggle with normalizing dates and times from different time zones and formats. It's a big problem. The services use different external pricing data, which vary in quality, completeness, and reliability. Finally, these services disagree on which transactions are taxable or not. These services have a very difficult task. I'm not trivializing how tough a job it is. But what about gain calculation when using decentralized exchanges? There will be no missing transaction because everything's recorded on the blockchain, right? The transaction counts should be the same, right? Well, think again. We benchmarked several of our clients' decentralized trading data using all the gain calculation services. These are unreconciled results. These are the out of the box results after you've entered the addresses and before the crypto accountants start to work. This is what we found for one of my clients, which was just fairly representative. What does the total transaction count tell us? The number of transactions found on the blockchain in this benchmark range from 3,500 to almost 10,000, with none of them agreeing. When we were looking at centralized exchange data, the data was coming from CSV files and APIs. APIs port a type of CSV file. And these files come from the exchanges themselves. But with decentralized benchmark, we're reading the immutable blockchain itself. Why don't a few of these services agree? Why is there no consensus? With distributed ledger technology, consensus determines truth. When there's no consensus, what is truth? This benchmark demonstrates that these services each understand the blockchain differently. Whenever I look at these benchmarks, I just shake my head and wonder, without consensus, whose results are accurate? Is accuracy attainable? And if so, can accuracy be proven? On a side note, what does this suggest about the promised benefits of blockchain technology? Distributed ledger technology is exciting and significant, but currently blockchain technology is a far cry from a robust double entry accounting system. I am not aware of any layer one blockchain that is instrumented with the fields needed by accountants to track the tax classification of transactions. This may require a more sophisticated layer 2 or higher protocol. Well, back to decentralized benchmark results. The last column is total proceeds. What does the total proceeds column tell us? The total proceeds number is the total value of all taxable sales before reconciliation. The results range from 88 million to 341 million. Now, why such a massive 4x spread? Well, the most significant hurdle is the lack of context. For example, ETH is sent to an address to buy an NFT. Later, an NFT token is written to the blockchain from a different address. The blockchain does not connect these two events, nor does it record the value of the transaction in fiat. Secondly, services can't read smart contracts and determine their tax impact. Some of the services can read very select smart contracts on certain exchanges, but it is more like a thimbleful compared to the ocean of smart contracts. About 1 million new smart contracts are written every week. These services can't keep up. Advanced DeFi transactions, play to earn, parachains, and chain bridging are generally unintelligible to these services. So, which crypto tax calculation service is best? The two benchmarks I showed are representative. Different clients would have different results, but the results follow similar trends shown in the charts. Hey, look, I know most of the heads of these gain calculation services. They are smart, passionate, and they want the best for their customers. Their staff is knowledgeable, These services have each adopted different mathematical and philosophical approaches to the task, which is why the results differ. It is expensive for these services to keep up with innovation and change. Most of these services should be charging 5 times or more in fees than they do. Bottom line, you get what you pay for. Users of these services are enamored with the ease of use and the ease of importing data. But there are other matters to be considered when choosing a service. First, the cost basis selection method supported, FIFO, LIFO, HIFO, and can it be changed after the data is entered so that you can do what if analysis? Do they offer backup files providing the cost basis of each sale on a lot basis? Can you generate an end of year closing lot position report? Can you export the total transaction record file? Can you annotate the reason for reconciling actions? Well, I cannot say which is the most accurate or best. It is possible that the emperor is not wearing any clothes. You decide. Where does this leave us for filing taxes if accuracy is so elusive? Well, this is a classic accounting problem of how do we count things when we can't be exact? All of these gain calculation services use the traditional reconciliation method where every sell transaction is matched to a buy transaction. These benchmarks demonstrate the limitations of this method. Another method of counting is aggregation, where we look at the total value moved in and out of a wallet to calculate the profit and loss for the wallet. This is a powerful approach for traders on decentralized platforms, DeFi, NFTs, peer-to-peer, and play-to-earn gamers. The third method is estimating. This method leans on a trader's self-perception and notes about his net trading gains. All traders have a rough idea how much they're making. Nobody knows better than them. That is the accuracy range in which they measure the results from the gains calculated on these services. This estimation method splits the difference between the ends of the range to come up with an amount of income to report. While not as detailed as a bottoms-up reconciliation, it may be more accurate. Each of these alternative methods has its own limitations. What does the law require? The taxpayer must have a reasonable cause and act in good faith in tax reporting. The tax code section 6662 says that the taxpayer must reasonably attempt to comply with the law. His effort should not be careless, reckless, or with intentional disregard for the law. The courts hold that the taxpayer must exercise ordinary business care and due diligence in preparing a tax return. Now, you might ask, what does my company do for its clients? Well, my staff uses 5 different tools depending on the client's needs. We use 2 reconciliation tools, an NFT pricing and smart contract classification tools, and an estimation tool. Because of our experience, we know how to address each of the service's limitations. We use the right tool for the right job. A good craftsman never blames his tools. You can schedule a private consultation to discuss your calculation needs. You should report on your tax return an amount of taxable income that you believe is correct in good faith. And then when you do that, you'll be paying the amount of tax you believe is correct. In an audit, you're likely to do fairly well. If you don't like the answer for one service, try another service. Why not hire a professional crypto accountant to do your gain calculations? Don't like their answer? Hire another one. For some traders, the gain calculation services are mostly useless because they have too many missing transaction records, too many trades. They used obscure blockchains, DeFi, NFT, play to earn, and such gain services that these services can't handle. Consider using a good faith estimate for your crypto income in these situations. Consider spending money on a professionally prepared tax return. That $100 you spend using TurboTax won't feel like a savings when you get audited. Do-it-yourself tax software and budget tax prep services Focus on doing the bare minimum to get a tax return. They don't go the extra mile. What happens if you get audited by the IRS? Well, that's the $1 million question, literally. When the IRS audits your cryptocurrency reporting, they may do their own calculations. Rest assured, their calculations will come in much higher than yours. They will say that you were wrong and that you owe them money. Claiming additional taxable income of $1 million or more is common. Even honest and diligent taxpayers get audited. If you have over 200,000 in digital assets, you should be considering getting some protection. Our audit defense membership is like car insurance for your tax return if you get audited by the IRS. For my audit defense clients who have hired us to represent them before the IRS, I unleash my forensic accountants to dismantle the IRS calculations and document all their errors for tax court. Thank you for listening to this exciting discussion. Share it with your friends. Please like the video, subscribe to our channel, and remember, taxes are sexy.